All right, Yahoo Finance is continuing its coverage at the Goldman Sachs Communacopia Tech and Media Conference, and I think we're talking a little tech, but of course little stocks right now at Robinhood co-founder and CEO, Vlad Tenev. Vlad, always good to see you. Appreciate you.
Always a pleasure, Brian. Thanks for having me.
So let's just stay on the topic of this conference, AI. How is AI going to change the business of investing and change Robinhood?
I think there's two big trends that could change how financial services are delivered. It's crypto and artificial intelligence. And Robinhood intends to be a leader in both. I mean, to a certain extent, we already are a leader in retail crypto. We're doing a lot there. For artificial intelligence, the opportunity is to deliver the same type of advice and tooling and experience that a high net worth individual can get from a very sophisticated private wealth manager or private banker, and deliver that to the mass market. And I think that's the really interesting potential for AI in financial services.
It seems like your platform over the past year and a half has had a rebirth. I mean, you're not an old company, but you're moving very fast and releasing a lot of new products. What are the brokerages, traditional brokerages, not doing? You know, where are their holes, and where are you taking market share from them?
Yeah, I think that it's really, I mean, you put it well. We have 8 businesses now that are generating over $100 million a year in revenue. So the business has become much more diversified than when we went public. And when we went public, we were really just a transactional business for novice equity and options traders, crypto as well. But now we have our gold product, which gives customers industry-leading yields on their cash, gives them great retirement benefits, an awesome credit card. And yeah, I think Robinhood is looking less like a traditional brokerage. Of course, we have a big brokerage business, but we aim to be leaders in retirement, in wealth management over time. We think that there's a huge opportunity with owning the financials of an entire generation. You know, Robinhood's been very, very popular among millennials. That continues to Gen Z as well. And we think we can be the place where millennials and Gen Zs custody all of their assets, and all of their financial transactions could go through Robinhood.
How far do you want to push your model over the next decade? Are we looking at a point where Robinhood is doing investment banking, for example?
I think that there's two ways in which we look at it. One is we have a lot of customers, 24 million customers, predominantly in the US, and we can continue to deepen the relationships with them, starting with all of the financial needs they have on a daily basis. Spending, savings, we've already got retirement, wealth management. You know, a lot of customers don't want to pick their own investments. They want a little bit of guidance. We think we can play a big role there. And then, of course, there's an addressable market of hundreds of millions of people outside of the US that are even more underserved. We've been making a lot of progress with our efforts in the UK and the EU to serve those customers. But then the third thing, to your point about investment banking, is we're building a lot of these capabilities in-house. And if you think about a business or an institutional investor, they also want access to the things we offer. You know, they want 24-hour access to the equity markets, they want industry-leading margin rates, a great customer experience. So over time, I do think you'll see us branching more out into serving other types of customers, not just retail, but also businesses and institutions. And you know, to that end, we announced an acquisition of Bitstamp, a global crypto exchange. One of the things that's very attractive about that business is that it's not just international, but also institutional. It gets us access to an entirely new customer base that we're not directly serving today. I think we can do more and more of that over the next 10 years.
We've seen some challenging times in markets, not super challenging, but it's been a weird end of August and September. I mean, how do you see market volatility playing out as we near an election season? And what do you think the impact is to a lot of the customers on the Robinhood platform who own like really these volatile stocks like Nvidia, like a Tesla?
Yeah, I mean, I think there's two things. One is we have different types of customers on the platform. So for our active traders who are engaged in more advanced products like options and margin, they have the ability to take advantage of different types of market environment, not just when stocks are going up, but also when markets are moving sideways and going down. So we're seeing those customers engage at a steady rate. For customers that are more buy and hold, they tend to see corrections in the market or volatility as buying opportunities, because the thesis for these customers is that AI and to some extent cryptocurrency is a transformative force, and that's going to play out over the long run. So we announced in August we had around the time of the carry trade unwinding in Japan, stocks got hit very hard, particularly some of the growth names, and our customers by and large saw that as an opportunity to get into some of these names at discounted prices.
Our interest rate, I was talking to Goldman's chief economist, Jan Hatzius, here at the conference. He's looking for really that first Fed rate cut happening at September 18th meeting. Does Robinhood, I think some of the street would think that you would make less money when rates decline. Are they right or wrong?
I think that I mentioned earlier, Robinhood, very diversified business, much more than when we went public. 8 business lines that are generating more than $100 million in annual revenue. And if you remember, when we went public, it was a zero rate environment. We had done quite well in the zero rate environment. Transaction volume and user growth were progressing really nicely, and we were growing at 300-400% year over year at that time. And so the question was, will Robinhood do well in a high rate environment? We had to put in a lot of work to diversify the business and to take advantage of the environment that we were in. But I still think Robinhood is perhaps a stronger company in a low rate environment. Transactions will tend to increase. There's more interest in investing. The margin rates, which we've been doing a lot of investment in our margin product, making sure that's industry leading. And we just rolled out industry leading rates across all tiers. I think that'll do well in a low rate environment. Credit, which is a nascent business for us, but feedback on the credit card from initial users, extremely positive. I think that will do very well in a low rate environment. And so I think on balance, the business will continue to do well, perhaps might be stronger with that macro, and we'll continue to diversify. The goal is really to do well in all market conditions and to really benefit from changing market conditions, not be dependent on low rates or high rates. And I think we've made a lot of progress towards that goal.
Vlad Tenev, always good to see you. Robinhood co-founder and CEO. We'll talk to you soon.
Thanks, Brian.